All right. Hello, everybody. Welcome back to Palantir Weekly. This is episode number 109. I am here with Arnie from Italy. I'm here with Dom from Nashville. And I'm here with Mateo Capital from Mexico. He changed his name from Matthew Money to Mateo Capital. So now he's adding capital to his name. I guess this is what happens when NVIDIA goes up a lot in a week. The whole market goes up and now you're Mateo Capital. So we're here today to talk about the broader markets. We're going to start off the podcast with something that's been hotly contested and debated over the past couple of weeks, but it's something we got to talk about. NVIDIA and the relationship between NVIDIA and Palantir. And I want to start this conversation. We're going to start for Dom because you are the largest NVIDIA shareholder on this podcast. You've held it for the longest. A, I want your raw thoughts on their earnings as a shareholder. And then B, I want your thoughts on what is the actual relationship between NVIDIA having this much demand for their AI and GPUs on Palantir and why that is or isn't a meaningful thing for Palantir over the next decade. And then we'll get Arnie and Matt. Go ahead.
Yeah. I think I hypothesize first off that I believe they are working together in certain capacities, specifically with Meta Constellation and the satellite projects and things of that sort. They have that kind of goes hand in hand with what NVIDIA is doing with Earth 2, Digital Earth 2.0. I think they may be working on 3.0, where they're actually mapping the whole Earth for a lot of different reasons, from forecasting to weather, etc. So I do think that there are some different things. They're also working, on Project Titan. They had a lot of NVIDIA gear with the Foundry software in Gotham and all that. But just in general, right? So they had a great earnings. It was, in my opinion, pretty much flawless. I think Colette is one of the best CFOs. Like Colette and Jensen is like Sham and KARP. I mean, it's one heck of a 1-2 punch. And the demand, I think people don't realize just how exponential the returns are going to be with AI and what's going to happen. That's why we keep seeing these crazy beats, right? Like they are leading the market. They have the demand. Jensen's very close with Zuckerberg at Meta, and they're definitely providing the chips for them. But I think it just shows that, and Tom Nash talked about this, so I'll give him the credit on just really highlighting this, was you have NVIDIA for the hardware piece, but it is an accelerated compute platform company. It's not just hardware, it's a software company as well. But for what they are from a GPU and hardware perspective that enables the AI, the software piece really of what an ontology and what Palantir's created is what will be growing in the future to where it will be a Microsoft and Palantir really owning that market. I mean, Chad from Palantir had a great engineering. He's one of the engineers. He had a great post earlier tonight talking about how there's other companies trying to do semantics and knowledge graphs and other pieces of what Foundry does. But you really need an ontology, and you need to be able to have it communicate in context. And everything that they've worked up for these last 20 years is coming to fruition in usability cases. And now you're seeing it accelerated with how AIP basically makes it all usable for anybody. So I think.
So would you agree more GPU demand means that there's going to be more software platform demand?
Yeah, there's more use cases, right? That's what I look for, right? Like there's more. We're going to see so many different things that's going to it's going to come so fast and so exponential in the results, like robots, for example. We are going to live in an age in the next 5 years where humanoid robots are impacting on manufacturing plants. And you just saw Jensen and Bezos go in together for funding a robotic startup company.
Yeah, you're talking about this thing that happened today. So Jeff Bezos personally put in $100 million. NVIDIA, OpenAI, and Microsoft invested in a $2 billion startup called Figure.
Yeah.
That raised about $675 million. NVIDIA is going to be at the heart of the chips that power these robots, and that's why they also invested in the company.
Yeah. So just in short, I mean, what that's telling you, and shout outs to Dan Ives. He was on this morning on CNBC talking about the AI revolution. it's showing you from a hardware position that there's going to be so many more use cases, and there's no other software like Palantir. Our audience knows that. So this is just going to open up so many more use cases. And I'll conclude with this. Tom Nash highlighted, like we have, the AIP boot camps that we've had in the last year, the 500 that we've had. You're not going to see that revenue materialize until about 12 months to 18 months from that. But there's a lot of people that don't understand their sales motion. And so while people are selling out thinking this is the high, institutional investing is actually quadrupled in the last 3 years, as he stated, in doubling down. And so any kind of pullback, I think institutional investing is going to keep adding, especially I believe that maybe we even make the S&P 500 soon.
Arnie, your thoughts on the relationship between NVIDIA's earnings and Palantir?
I think what we have been seeing is the transformation from, AI could be the next big thing to, whoa, AI is definitely the next big thing. And we are just scratching the surface of how big it could be. The last results of NVIDIA essentially highlight what could be compared with the early stages of the internet. The end game of the internet is not to build the infrastructure, but the end game is to build applications on top of the infrastructure. The fact that the infrastructure is speeding up so fast, as the data centers results of NVIDIA underscore, it means that the future demand for applications is actually very high. Now, this tells us that we are not in that bubble territory, at least in my opinion, because there is strong hype, but that strong hype is also backed by substance. It's not like crypto years ago, crypto here, it will change the world. And okay, many months have passed, but at the end of the day, if you truly want to exchange some money, you just send a Bitcoin, and all 99%, maybe 99.9% of the other stuff is just useless. So the paradigm shift is happening, and I think we are still in the early stages. And there is this feedback loop narrative where the more people see something is building, the more interest there is in actually building on top of his infrastructure, and the Palantir is set to benefit from that. Now, it doesn't really matter if the multiple, Daniv said, reiterated essentially what we have been discussing weeks ago. You don't build this infrastructure for the sake of building an infrastructure. You build the infrastructure because you want to run things on top of that. And there will be a multiplier effect, because if you build an infrastructure that costs 10, you don't want to build on top things that deliver the value of 6. You do that because you want to build stuff that are worth at least 20, 30, or even more. So that's the underlying narrative. If 20 billion are spent on infrastructure, you need to have at least a multiple of 2, 3 for the application layer to work off. Now, let's go stricter to the stock. I think at this point, it is undeniable that there is some correlation between the performance of NVIDIA, which is stellar, and to what we have been seeing with Palantir. I think it is undeniable. Obviously, if you zoom out, you have a different picture. But when Palantir got listed, there was no AI, and the narrative was completely different. Now, before, Palantir was strictly connected with ARC, and we can see that like during the drawdown, like it was matching perfectly ARK, and now the narrative of Palantir being an AI leader detached from it. So you see how the narrative shapes the stock movement, because as I explained some time ago, asset managers, yes, they pick stocks, but more importantly, now they are more focused on selecting teams. A team is a basket of companies that are labeled with a simple way to identify this cluster. So right now, asset managers are not that good at picking specific stocks. but they prefer to buy a basket of stocks so that they can say, okay, we are exposed to that theme. And now Palantir is officially becoming a part of this essential theme where all institutional investors need to have some exposure, otherwise their client will be pissed off. But there's NVIDIA making 10x. Dom Rinaldi makes fun of us. How we need to be exposed as well. And Palantir becomes the perfect way to be exposed as well. So even if there is no direct direct relationship, direct causations from the more NVIDIA sells, the more Palantir sells, there is a connection. It's like saying if McDonald's sells very, very well, it is reasonable to expect also Coca-Cola is actually making well, and all the other way around. So there is a connection. There is not a direct causation, one-on-one, but from the eyes of an institutional investor, the fact that Palantir actually belongs to this cluster is a very good positive thing. But also creates some opportunities for us if we will see some detachment from the narrative and what we have been seeing maybe closer. Because maybe now with NVIDIA that goes to the moon relatively fast, as soon as Palantir maybe grows, but not that much, there could be some disappointment.
Matt, your thoughts on NVIDIA's relationship to Palantir?
Hey everybody, Matteo from Matteo Capital. How is everybody doing tonight? Great to be here. Thank you for inviting me. It's always a great time to chat.
Thank you for inviting you to your own podcast. That's
my own podcast. No, it's hosted on your channel, man. You appreciate it. Well, sure, whatever. I'm happy to just be here. Whatever. No formalities. Great time.
I have a question before you keep talking. Did you the chicks you're meeting up with in Mexico right now? Are you showing them your Palantir share count, or how are you? That's
not important. What is important is we're here to have a very sophisticated and great discussion. And as Philip Rizzo noted, Matteo Capital, my line is now open, and I'm very appreciative of that. I am the head trader as well as the head analyst at Matteo Capital. No, I'm just kidding. So anyway, back to it. I'm actually not drunk. So if you guys think I am, just a little sunburn. Very happy to be here. So I agree wholly with a lot of what Dom and Arnie both had said. I just want to highlight, I'm not sure if I misinterpreted what Arnie said because of his beautiful accent, but I think one of the things that I want to note is Palantir has been doing AI for quite some time. I think everybody knows that. I've experienced it since 2016 personally. They've been doing digital twins, and digital twins is very much a form of trying to replicate real life models associated with, just basically putting it into the digital cloud and being able to understand and create the best opportunities going forward and help with decision making. So we've done that real time at UDoc for quite some time. And I think really the relationship that we've seen blown up with the, relationship with the stock prices with NVIDIA and Palantir, I think is just a reality of people starting to get onto the train. I think people have always kind of known underlyingly that Palantir had these products in the back end. They heard that Foundry could create digital twins, but in reality, it was kind of like I would say, as we've always known, a horrible go-to-market sort of strategy. And so it's been hard to kind of see what's underneath the hood. And until AIP truly came out, and coupling that with the demand that we're seeing now from NVIDIA, I think it's really starting to play kind of a more key relationship, and people are starting to recognize the potential with that. And also, I think a lot of people have been chatting too much about and just saying AI on a call just to kind of get that clout and maybe try to get any sort of valuation from that as possible. But the workshops that have been had, the boot camps, etc., and the great continued relentless talk from KARP, Sham, and many of the others, specifically the current recent publicity we've seen via social media, and the employees being allowed to be a little bit more vocal compared to where we were about 6 months to 12 months ago, has really kind of shown a light on these products. And coupling that with what we're seeing with NVIDIA, I think it's allowed it to kind of keep at pace. Now, of course, NVIDIA has done phenomenal. I'm sitting here and very happy for Dom And at the end of the day, I'm just kind of curious as to how sustainable this is. Is it front end loading? It kind of gets me scratching. And some quants with really nice glasses in Wall Street, I'm sure will be able to have a lot better of an idea as to what the revenue going forward for those guys looks like. But I'm just happy that Palantir is kind of getting the recognition of what capability their tools truly have, because I think that it's been such a long struggle since September 30th of 2020 to get that across to people, even through relentless work by the Palantir team in their Investor Day presentations, in their AIP cons, in their Foundry cons to demonstrate AI capability. And so to just be jointly connected to the stock of NVIDIA because of its AI and its forward looks, I think is very great. And I don't know if that necessarily answered your question, but
I think broadly NVIDIA demand means that there's going to be more AI software demand, as Dom and Arnie said. And look, in the context of the stock, now Palantir didn't perform like NVIDIA stock this week, but the point is, I think all of us have seen people on CNBC just buy up AI names to buy up AI names, and they're just talking about the secular trends. Palantir's in that name, whether people like it or not. And so if NVIDIA's AI, Palantir's AI, NVIDIA goes up. I mean, AMD went up 10% today or yesterday, for no real reason, right? Because of NVIDIA. And so it's going to happen with Palantir. That's just reality. And those are different opportunities that arise. Dom, let's talk about healthcare. So they did a healthcare webinar. Can you walk us through what that webinar was like? You actually got to attend it. And what are you thinking AI is going to look like in the healthcare space for Palantir?
Can we skip that? Because I'm looking for the slide real quick because I want to show you some of the things and pop it over so you can share your screen.
Okay.
Yeah. Could we?
Well, we'll do another topic and then we'll go back to that. Okay, perfect. Okay. Arnie, we had KARP. Did you get to watch KARP's new interview?
Mm-hmm. Yes.
Okay, cool. So I'm going to play a small clip from it, and then I want to get your thoughts on what that interview is about and what he said. So here's KARP today at a new conference. This is like his 5th public appearance this month speaking.
In the past, you shaped the world through, ideas and words. And I obviously at the time, this was pre the software revolution, but I really came to believe that and believe now that the world will be shaped through the embodiment of ideas and words in software platforms. And that these platforms are so levered that in fact, they will shape our life in a way that words used to. In the past, you shaped.
So he, well, I want to get your thoughts on that interview or that public appearance. Along with that, we now have boot camps in Zurich. Lord Harrigroom tweeted about this, and London that are going to be happening in March and April. So we're seeing international commercials start to maybe expand from a boot camp perspective. What were your thoughts on that? And then what were your thoughts on KARP's latest appearance?
We are boot camping everywhere. And I've read, I think again from Lars Grimm, that there will be an IPCon, another one very soon in a couple of weeks. So
yeah, I think AIPCon 3 is on the horizon. So
and I think AIPCon 3 will be like the big one, like the very, very big one, because so far it was like, okay, there is demand. We already tried to explain, but now there are so many use cases that could be very nice to explain. I think this way, these conferences are actually very good, very nice. The more big use cases you are actually solving with big customers. And now there are many customers that have been playing with these tools for many months. And that also helps creating new, more bootcamps that are actually interesting. Since I haven't attended a bootcamp, I can't really tell exactly how they are developed, but I can't help thinking that the more bootcamps Palantir makes, the more use cases it actually learns. And the cool stuff is that Palantir neither has to please give me a problem to solve, where actually the clients coming to Palantir, please help me solve this problem with AI. So it's like everything that you want, but just faster. In that interview, I have to say, we don't really have new information for KARP fetishists like us that have been following any interview. Is like, okay, somehow this is something that we already heard, but I love the confidence with which now KARP is talking, apart from the violet shirt, but That was actually a very good one. But he underscores some very nice points. For again, if you are truly confident on the product, you are in the position where you say, come and test it, even for free. If you are selling a scam product, you want to monetize first and then disappear. Then you say, the way you build software is very different from hardware. In hardware, you need once you have like good enough people, the more good enough people you tend to have, the better the solution tend to be. In software, you just maybe need that person. That one person alone can do a better job than 100 good enough minds. So the more we go through this, the more we understand actually how Palantir thinks in terms of its product, his engineering culture, why they want to be relatively small compared with the size of what they build, why they are so engineering focused, why they are so obsessed with getting people with spikes in their skills.
What KARP said in that interview is that we win. We don't focus on losing, right? And he was basically like, we need to celebrate like people who want to win. And that's who we're betting on. That's who we're investing in. Someone who doesn't believe in losing. Someone who actually believes that winning is possible. And that's what we should strive for.
So will we win?
We will win.
That's the bet.
That's the bet. Okay, Dom, yeah, you're good.
All right, I found it. So I'm going to, I guess I should just share my screen. It should work. All right. Share screen. Share.
There we go. Yep.
And try to zoom in here. Okay. Is that still showing?
Yep.
Awesome. So I got to take part and attend this AIP webinar. This was part 2 of their 3-part healthcare series, and it was awesome. For any of those in the audience who got to attend it, I'm sure they would agree. We got to see Tampa General Hospital talk about the different use cases and really how they deployed it, and kind of in phases have been getting more and more value out of the platform. You can see here reduction in PACU hold times, increase in external transfer volume. At HCA, they had 90% reduction in time to general staff scheduling. They talked about how general staff scheduling, that's kind of how they get in with a lot of healthcare entities. They really try to find what is the most impactful and quick and easy problem to solve that won't break the bank for the customer, but will show them the value of Foundry. Right. And staff scheduling is definitely one of those. So what I really loved is a kind of a conclusion of the webinar. They had over 90 different hospital entities, healthcare entities on the webinar, 440 attendees, and they came up with this starter pack. You email, and if there's any healthcare employees on the chat, email this this email address, and then they'll set up getting your own sandbox for Foundry and AIP for some specific use cases, and you'll even get 1 day of virtual session with one of their forward deployed engineers. You can see here a one-on-one virtual boot camp. So they're even taking it a step further. I wonder if they're watching our podcast, because this is exactly what we were talking about, which was taking specific use cases and having that as entry points into getting more customers to be using Foundry and AIP. And once you start solving these problems that take, a very long time with other solutions or have never been solved, like you can see here, just on staffing and scheduling, predictive staffing, optimized balancing, schedule automation, you solve that, that's going to lead to all these other things that people are going to start saying, well, can it do this? Can it do that? And then you have all of these quote unquote partners, which these are some of the leading healthcare organizations in the country. If they're using it and keep growing, it's very similar. It reminds me of, that slide that we always see with the top 20 customers of Palantir and how they keep buying, like on average, it's like another 10% every year. So like, I think the average top 20 accounts spend like 55 million with them now. I could easily see this happening for the healthcare industry, and you just see these guys showcasing that business model. So check out who posted this. I don't know who that is, John, but there's some other people posting this. But it was just an awesome session. And how do I stop sharing?
I got you. I stopped sharing it. Go ahead, Arnie. Go ahead.
Those clients that you shared, by the way, there are like New York hospitals and Hawk Street that are new, at least to my knowledge. So it's great to see also new logos coming in.
Yep.
You mentioned that the top 20 are around 50 million per year. How reasonable do you see that all of these customers could potentially become a 50 million customer? Because I'm not in the space, and
Sure.
50 million seems
I mean,
very,
those are your
very high
biggest, the
compared
biggest
with all the
customers. I
others.
don't expect them to be that level. I mean, some of them may. Like,
But
I mean,
could them potentially be there, like given the size of these companies, or is just a dream?
I mean, I think some of them have that kind of money. I don't know off the top of my head how many billions HCA generates, but I mean, they already have 20% of the healthcare beds in the U.S., right?
Mhm.
So I easily could see them taking something like this, the sandbox, and getting this into where it can get into smaller conglomerates. And then eventually, I think we all can agree at some point, I don't know when, there it is. Lunar and me are like, ESP, I did not even like look down. I just saw it. And I was about to say the word, you're going to see Foundry modularized where modules will be sold, because you can't ask a small small clinic to pony up $1 million for Foundry if it's not a conglomerate or a multiple set of hospitals that aren't generating that kind of revenue. But hey, maybe they can pony up, $100K, and that's a big deal for them. And you're going to help still solve your mission, because this is a very mission-driven company, and I think that they want to help healthcare all the way, throughout our country and all Western allies. Does that make sense, Arnie?
Mm-hmm. You know what's fascinating is that I even shared this same picture, but I just focus on look, new clients, and look, these are the use cases, and I completely underscored I completely missed the importance of the text that was above. Which was, okay, you just send an email and you get a sandbox. Maybe because I'm not familiar with this idea of the sandbox. Can you explain a little bit?
Yeah. So
what
is
that and why that is important? How that could actually help not only fastening the cycle, if it's the case, but how it could be also in terms of economic terms. Because one thing that we underscore here at Palantir Weekly, and I would say, thanks to all of us, but in particular to you, Dom, because we actually discussed, hey, the bootcamp is actually a very effective way to actually get a client compared with a pilot. And now we are seeing the effect of these in terms of margins and how everything is speeding up.
Yeah. So a sandbox, sorry, had some ice water go down wrong. A sandbox is a trial contained environment that think of it as if something goes wrong with it, I can blow it up and start over. I don't have to worry about anything happening from a virus or security perspective, because it's kind of isolated. Think of an isolated, environment, data environment, that you can use the tool and use it, but it already has data and things pre-built to solve that particular problem. So my guess is they already have. Go ahead.
Is basically a copy of the existing problem.
Yeah, think of it like an environment already filled with data that can already solve for specific use cases. So I bet you they already have data for demonstrating how taking hospital data for schedule automation, the predictive staffing. And so by doing that, it speeds up the adoption. It speeds up seeing the use case. Sorry.
That water got you good.
Yeah. Hold on.
That water got him good. That was cold water.
Got tears coming down. Wrong pipe. That's how much I love
That's how
Palantir.
much you love Palantir. Yep.
So yeah,
Cry for Palantir.
it speeds up the sales motion and the adoption.
Mm-hmm.
Matt, any thoughts you have on this webinar that maybe got 90 new potential clients for Palantir? Maybe they need to do more of these in different industries.
I think we're continuing to see a great dominance within the healthcare space, and I think that that's phenomenal. I think that's been something that's evident. I applaud that. I think that we're going to see that within the UK. We're seeing it well in the US. I really hope it also moves to Canada, just knowing how the state of their healthcare system is as well. And I hope it continues to all other westernized sort of civilization or Western focused countries that are in partnership with the US or allied with the US also get the same sort of treatment from Palantir. I think it's undervalued. I think a lot of it has to do with the fact that it takes so long, I think, for some of these software products to truly get the true due diligence from IT departments. And then there's the politics within IT departments. And I mean, Dom knows about this better than anybody. I'm just a frontline engineer most of the time. But I mean, something as simple as getting the AIP approvals within an organization can sometimes take a year. And it's like, why is that? And I think some of these companies are just so big, and sometimes they lose focus on potential products. And it's like trying to move a cruise liner versus, trying to move a jet ski. And, some of these organizations, I applaud the fact that they've been able to maneuver very quickly and been very agile, but other companies, I think, will just take a lot longer. And so, it could have took them a couple months before they finally got somebody in the boot camp. And I hope it kind of grows like a weed, and eventually within 6 months to a year from now, because now that we've had probably about 6 months to 8 months to kind of get that initial rollout, within the next 6 to 12 months, you start to see some of these bigger clients. Dom was talking about the top 20 kind of folks and how they're 50 million annual run rate. I'm just thinking a lot of those probably, because they're so big and can already support some of these Palantir contracts, probably don't even have AIP implemented yet because of the size of the organizations and how much due diligence they'll have to do before they're implemented. So I still think that there's a lot of opportunity. I mean, we've not even been having AIP as a product fully rolled out for over a year yet. We've already been able to see the potential that it's had. And we also know, even though, yes, they've been able to kind of reconstruct their go-to-market strategy, it doesn't necessarily mean that they've reconstructed their billing cycle. And they might just start off with $1 million contract as kind of just a blanket kind of contract and then come back a year later. So I think you're going to see a lot of upselling when we get through the next, I think, fiscal year 24. And I think fiscal year 25 will turn out to be a very good banner year, and not million like KARP wanted, but hell, we'll get to 3.2 to 3.4. I think it'll be a good year. But overall, I think it's really good. I also want to talk a little bit about the conference piece that KARP had. So not to go back a little bit, but I think you need somebody like KARP showing the company's purpose, because without a company purpose, everyone's going to be kind of going in their own direction as to what they think is truly the best. And so if you have a very firm company purpose and culture, you're able to kind of really drive your employees to direct what your products truly do. And I think all these Palantir products have always been focused towards creating greater data efficiencies, cybersecurity in mind, really just interconnecting and integrating data between people and building a foundational product that really, if we knew what we knew back in the 80s and 90s, probably would be how we build operating systems. But at the same time, these operating systems that were built back then were focused more towards the consumers, and now these are more focused towards the Internet of Things and all the data that we get on a day-to-day basis, which has literally engulfed us in terms of the amount of data that we generate, and it continues to accelerate at a rapid pace. So this is what we know now, and this is how we're redesigning these operating systems to truly incorporate those. And I think it's really, you need somebody like KARP who sees that, has seen it develop over the last 20 years to be able to steer that ship. And I think he's doing a phenomenal job. Anyway, a little bit of two pieces in one, but.
Okay. Arnie, I see your clip. Let's do this topic real quick, and then we'll get to your clip because this was actually a pretty big topic this week that we didn't talk about yet. Dilution. So 110 million shares. Palantir announced on Monday via their their form S8 that they were able to it now put onto the open market. So this is from a 2020 equity incentive plan for employees. 250 million shares are available to essentially dilute, right? Put onto the open market, but they did 110 million, so about 5% of the 2 billion outstanding. And this got shareholders kind of concerned of just like, why are we getting diluted? They said they were going to buy back shares, but they're issuing shares. What does this mean? Overall, the top level thesis for the share dilution, the way I understand it, is this is for stock-based compensation. It's not to raise money to pay for XYZ. It's just to issue shares to employees. Some shareholders are kind of annoyed by it. Other shareholders are like, well, we need really good talent in order for this, for the job to get done. Arnie, let's start off with you. What were your raw thoughts on the dilution? It couldn't have been a surprise because, they said in 2020 they have the right to do this, and now they're just finally executing it. And do you think this is the right time for them to be doing this in the face of them not doing the buybacks?
I think this presupposed that there is something new happening, but in reality, there is nothing really new happening on the negative side because it's just they included the equity plan 2020 in the 10K, but this equity plan was already out, so that the shares connected with that are there were in the pipeline, and it's like when you do a buyback, first you announce it so that you predispose for that to happen, and then when you execute, that actually happens. When you need to increase the number of shares because you are giving new shares, that changes the capital structure, so that you need to first authorize that. So this is an authorization for shares that are going to be delivered gradually, and if the equity plan goes fully executed, so that there will be this reward, then you will have the actual dilution after the targets are achieved. So let's go to the positive side. So bottom line is there is nothing new. There is no real new dilution coming because that it was already in the plan. And we know that Palantir needs to do this. So it's not that now we will see the number of shares increasing because of this, but we will see a normal, normal path to this. But there is something, a detail that actually changed everything in the stock-based compensation plan. Could you share the screen, please? A big problem we had as a shareholder, and I would say that was a big problem, was that Palantir was only giving, to the management options, but for regular employees, restricted stock units, meaning that if they work for 4 years, they will receive this set number of shares. So employee works for 4 years, it will get shares every year by accumulating them every year. But there was no target, no clear performance indicator that would tell, okay, if you achieve this actual output, you receive this amount of shares. If you receive this target, you receive this other amount of shares. You suck, you receive no additional shares. It was more, okay, the more you work, it's like as long as you work for this time, you receive these shares. It is like a time-vested period. But now there is a new wording, something that appeared in the 10K for the first time. We have RSU, so restricted stock units, what I just described previously. And just to be clear, these restricted stock units, RSU, is actually what is delivered as SBC. So when we read SBC, we mean, okay, this is a cost given in shares, and RSU is the technical way how the company gives this stock-based compensation to employees. with these new shares that are vested over time. But now there are also these P RSU. What's this P? P for performance. So we don't know the details, but the idea is, yes, you receive shares based on the time you work here, but if you actually achieve the targets that we fixed, and unfortunately that are not disclosed, it would be lovely to know, but maybe we will know in the future. I have an idea. But if you actually achieve these targets, you will get these additional stocks, the PRSU. So this creates a very strong incentives. There is no performance, you get no additional stocks. You perform, you get these shares. And we have seen with Elon Musk how strong the incentive could be when you have high targets, how that incentive actually can translate to strong motivation and strong results. So this is the perfect way to align us as shareholders with employees. And actually, this is the implementation of what was said many months ago in Q2. The CFO or whoever said, we are in the process of linking future employee equity compensation to the success of AAP. So that's why KARP also says, we are restructuring the entire company on the success of this stuff. So essentially, if AAP works and all the employees are fully aligned on the success of AAP, we win, shareholders win, employees win, everybody wins, and Palantir wants to win.
Dom, your thoughts on 110 million shares coming to the pie? It means you own less of the pie, but is it worth owning less of the pie?
Yeah, so I'm really just excited that they're now doing it aligned to performance. I mean, that's the biggest thing, right? There's a lot of people at a lot of companies and companies I've worked with over the years where just for being there an extra year or whatever, you're awarded so much money in RSUs. The concept of RSUs is to keep your restricted stock units, is to keep your employees over a 4-year period, right? And some companies will vest them quarterly, which is kind of them, which is nice. There are others that are kind of ruthless out there that will only vest like 5 or 10% the first year, maybe another 10 or 15 the second, and then they don't give you a lot of RSUs until year 3 and 4. Keep in mind, they have all the capability of letting you go before you get to year 3 and 4 if they want to, if there's restructuring or whatever. So I like that it's performance based. That's even like a next level, higher level of accountability. And so I'm not too concerned about them releasing more. Like I just want them to keep the talent they have. And if that's what it takes, then so be it.
Matt, your thoughts on dilution?
You know, I have a personal opinion about this because I also get paid partly in share-based compensation. And so it is something that I think most organizations do use. I mean, just to take a step back, Google, who has bought back hundreds of billions of dollars worth of shares, had they basically been able to buy back all those shares and not have any share-based compensation to offset that, they would have bought back 15% of float over the past 15 years. But instead, based off share-based compensation, they've only been able to buy back 9.5% of the float. I actually just wrote about this in a Seeking Alpha article released about a week or two ago. So it goes to show that even though they're buying back hundreds of billions of dollars worth of shares, that's being partly offset by this keeping talent, as Dom so eloquently put it. And so it really gives people that ownership of being involved with the company, involving themselves in the company's success, and really going back to that main piece of aligning yourself with the company's vision, purpose, and it really gets you to buy into it literally and figuratively at that point. So I'm for it. I think eventually this company is going to be turning out way more margin than we truly anticipated. And my hope is that we start to, not necessarily next year, but within the coming years, start to see share buybacks that offset this almost entirely within the matter of a couple quarters. So I understand where they're coming from. Does it suck? Absolutely. You get diluted. But at the end of the day, you're not going to zero. You're not losing the company. At the end of the day, you're just diluting yourself 4 or 5%, and it could be a lot worse. And we're kind of used to it. You can't really complain right now. But I think 5-10 years down the road, we're going to be making $5 billion in net income, and it's going to be silly to even be having this conversation. I think it's pertinent to have it right now because this is what we're seeing, and we're biased towards that. But if you look at the long-term picture as to what this company is building, that's going to be able to be bought back pretty quickly. And I think at the end of the day, I'm excited to see how the financial frame looks, what they use it for. Do they continue to do buybacks or at least initiate them? When is that going to happen? It all kind of brings that more towards a forward, more pertinent conversation, because you don't really worry about Google's share-based compensation because they're buying back so much stock. And same thing with these oil and gas companies. We're getting share-based compensation, but nobody really questions it because it's getting bought back in the share buybacks. So I think once you establish that and you get far enough down the road of maturity and profitability, this is going to be something that's just a time and place, and we'll forget about it in just due time.
Well, also consider that we see a strong impact of the dilution on Palantir because the scale is relatively small, but the bigger the company becomes, the more scale effect, economy of scale you get. You don't need to double the size of the employees in order to double the size of a company. You need to increase that, but the beautiful thing of software is that this thing scales. So the bigger the scale, the better it becomes, and the fewer marginal employees you need to have to run this stuff. Like I remember I read something about Google. The search business is actually run by very, very, very few people. They are probably embarrassed to say how few people actually work on the search division, because that would be scary. So once you have immense scale, maybe you still dilute a lot in terms of absolute numbers of stock-based compensation. But if that stock-based compensation is actually nothing compared with the size of the revenues, the operating profit you generate, you say, okay, that's the cost to have that famous top 1% of the top 1%.
Do you think they should do buybacks right now? Dom, go ahead. You can answer that too.
No, I don't think they need to, we would benefit in the short term. I think they need to keep capitalize on winning market share and converting customers, because we've seen with their top 20 accounts, once they do that, and I think healthcare is one of those industries where I could see them really taking a majority of healthcare in this space. And you just saw that they launched Foundry for telecommunications today.
Oh, really? I didn't see that. Oh,
yeah,
wow.
yeah, that was announced. And so they're very thoughtful in how they're doing things. I don't think the retail community, definitely not the institutional community, gives them enough credit when it comes to this. When they just see stock-based compensation, everyone wants to throw up their hands and get all crazy. But they're keeping their talent there, and they know how valuable their people are. And Coach Strap had a great comment. He said earlier, revenue per employee is a much better, metric to really look at it. And I would highly agree with that. And so, yeah, I wouldn't be too worried about the dilution and everything else. And I wouldn't be doing buybacks. I would be figuring out just how to capture more market share at a scalable capability, which really AIP seems like it. So how can they do that even better? Well, the sandbox is now probably going to be a new idea that they start using in different industries.
Arnie, your thoughts on if a buyback should happen now or?
I would say in Insight, it is obvious that it would have made sense to make it at a price that was not the half, but not that far from the half. So before the earnings, at this point, I would not rush to make it I consider that to be a weapon you want to utilize, and if you disclose you use the weapon, that becomes less effective as a signal. So, and as a principle, buyback is an investing choice. So as an investment, you want to make it when the stock is truly undervalued compared with the fundamentals. At this point, it is undervalued only if the future unfolds in a very strong way, which I personally think it will happen, but maybe even inside the company, they don't want to rush making. So let's put it this way. If the stock was $5, but everything else is unchanged compared with the reality, it would make a crazy sense to say, okay, let's put 2 billion in the buyback, because essentially you buy back the company for free. But since this is not the case, there is actually a big question mark in terms of the valuation. It's not that intuitive that is a good price. There is still a question mark on the operating side. It makes sense to say, okay, let's just wait. Let's focus on attention not on the buyback, but on actually getting the whole market.
All right. I think that's it for us, folks, today on this episode of Palantir Weekly. Thank you, everybody, for joining us. We'll be back next week to discuss everything in the world of Palantir. And I think, they're just getting started. AIP Con 3, I'm pretty sure people know that's going to be happening soon. So that's going to be exciting to see what new customers are using AIP, what use cases they have. I mean, we've seen healthcare, we've seen energy, but I'm sure there's so many more use cases. And we'll be covering that over the next
last thing to let people research on. One, make sure you're checking the Palantir blogs. There's a lot of great content that you can learn about what they're doing and understand more from a technical perspective. Two, the JDAC 2 article that was posted on Twitter or X, they have some new milestones that are being met, and a lot of it is code words for basically what an ontology does and what the ability to synchronize the different military departments and how they communicate effectively and securely. And they talk about over $1 billion being spent on the GADC2 project in 2024. And it's really interesting, the different countries they talk about partnering with, such as South Korea, Japan, and Australia. All of those countries use Palantir in some form or fashion.
And they've been publicly calling out the government on their Twitter. Like the actual Palantir Twitter has been saying, look, the DoD barely spends any money on defense. They said they were like, this is a woefully lackluster amount, like some pretty harsh adjectives, because they're trying to make people believe or understand why government spending on this is important.
Yeah. So, and then lastly, they are going to be at Vive Healthcare, I think at the end of the month, which is a big healthcare conference. And then the Titan contract some of it should be announced at the end of March as well. So a lot of cool things that are on the table for Palantir shareholders.
And the potential S&P 500 inclusion.
Yep.
Yeah, the March rebalance is happening. Did you guys have an opinion on that? Like, it's literally just up to that committee if they want to put Palantir in March. That's their.
Let me say that this is quite a mess. Because I remember I read the official documents of the index rebalancing, and it was written that every quarter it is rebalanced. So March and every 3 months you have a rebalancing. Yet it is not really clear, at least to me, in terms of, okay, to rebalance, you first need to have a committee gathering, and that committee has arbitrary judgment on the inclusion, because the idea is they want the index to reflect the real economic backbone of the economy, of the US economy. So they want the index to be so the stock market indexed to be representative of the real economy. So there is judgment there, even if many companies are eligible, that doesn't necessarily mean they are included. I think Palantir is not only eligible, but also there is a very, very strong incentive to actually make them part of the index, because we need to think, okay, who are the clients of these indexes? The institutional investors. And institutional investors now really want a little piece of this AI cake. And Palantir would be a great way to actually be exposed to this. So this is entering in the speculative field of the market. But if I have to bet, I would say there is a very strong incentive for the committee to actually make Palantir inside. There is no real talk up to now about the S&P 500 inclusion. So while Palantir has moved a lot in the recent weeks, but the narrative was more based on the results, spectacular results, and the fact that they are very aligned with the AI narrative. But so far, we haven't seen any reaction based on, wait a second, the institutional investor ownership is increasing a lot, but the narrative behind this is not really on the S&P 500 inclusion, which is something that we know will happen as we are fetishist on Palantir, but I don't think there is general awareness on this, and that didn't trigger the conversation around it. So my speculation, I underscore, this is pure speculation. I think in the next 2 weeks, we will start seeing more rumors related to that, because my understanding is that the rebalancing happens at the end of the month, so end of March. So the committee should gather some weeks before. So broadly speaking, at the beginning of March. That's my underlining picture. I wonder what you think about it.
I just want to chime in and say that I think that this quarter was really fundamental in making that decision. Obviously, you have to be profitable for the trailing 12 months, and everything like that to be included in the S&P. And I think everyone knows that it's only 500 companies, so somebody would have to leave in order for Palantir to join. But all that being said, I think one of the things that was strange to me was the day after earnings, Palantir went up to $22.50. And the subsequent few days thereafter, it climbed to 23, 24, and then eventually got to 25 and change. And normally when you have these good results from Palantir quarters, you'll go up to $21 and then slowly come down after the subsequent days. And then same thing with, when we were getting to the 18s was a big deal. And then it slowly came down to the 15s, 14s over the subsequent days. So to see that strength going on for over a week before you actually started to see the tail off until this 100 million share-based compensation kind of dilution event came out, to me shows that you're having a lot of fundamental institutional buyers entering into this space, probably with the prerequisite of what Arnie is talking about. They know now that it is kind of set in stone. You now have, 5 going on 6 quarters of net profitability. I think they just wanted to see that it wasn't some sort of trick. And then also, some of these things are a little strange, right? They might care about the trailing 12 months, but they also might care about a fiscal year of profitability. So now they can look back on fiscal year 23 and say, okay, fiscal year 23, all quarters were net income positive versus, so a lot of these sort of people play weird games in that sort of sense. I'm not saying that that's what they're doing at the S&P, but I've seen that happen before with like dividend raises, right? As long as you raise a dividend in the last quarter, you could keep the dividend flat for all of 2022 and then keep it flat for all of 2023. As long as you raise it in the fourth quarter of 2023, you still claim yourself as a dividend raiser. You can consider yourself still a dividend king, even though you haven't raised it for 7 quarters in a row. So there's these little games that go on, and I'd be curious to see if that's one of them. But to me, it felt a little bit stronger this quarter around of the buying after earnings compared to the initial jump up and then the immediate fall off that we've seen before.
All right. There you go, folks. That's it for us on Palantir Weekly. Thank you for joining this week, and we will see you next Friday. Thank you, everybody. Have a good one.
Thank you.
Coach,
See you next
Co- Coach Rep, I just got your question. Do any of you have thoughts on what might be Palantir's roadmap for 2024? We'll start off next week with that question. That's a good one. We'll discuss that one. Thank you, everyone. Good night.
Thank you. Ciao.